All right, guys, welcome back. So let's have a look at Eli Lilly. So LLY, this is pretty big, large healthcare name that is trading at the moment at $749, $48 levels. That's where it closed November 22nd. So I'm not a fundamental analyst, so I'm not going to be diving too much into the fundamentals, but we'll glance through overall what I'm looking at when I'm trading or when I'm placing in general, like bullish bets or bearish bets, because I trade mainly options in this channel. So if you're new, consider subscribing. So if we just quickly analyze the numbers, it is very large cap stock, 672 billion even at this price. At some point I thought it could go past $1,000 mark and be maybe first $1 trillion stock, because if you go back, take a look at my Twitters, I was watching like, is it hinting that it's going to get over? But they've reported pretty bad earnings, and stock got pretty much smacked down from its highs, about like 20+%. Earnings PE, that's what I wanted to show you guys here. I mean, this is Thinkorswim. Of course, it will differ from platform to platform, but 95, 60, 5-year average, 43 free cash flow, price to cash flow, and 64 currently. And you can see definitely when you are growing, I mean, market tends to give you that premium and you will trade at the premium. But the moment you miss market expectations, market is very quick to readjust and punish you very quickly. And that's what has happened. And is it going to have more downside to come? Possible, very likely. And my price levels right here, right now, anytime I see any stock, large cap, small cap, doesn't matter, if it's especially large cap, if it's below its 200-day moving average, this is red line on my chart, I'm extra cautious about going long of these names. And I don't like, I have never been good trying to pick a low, and I just follow the old sayings from hundreds of years. When stock makes a new low, you sell. When stock makes a new high, you buy. That's it. Very simple. Again, these videos are purely for entertainment purposes only. This is the level right here, right now, 760, 770 as a resistance. At the moment, it is above its 5-day moving average. So if it gets going, maybe test its 20-day moving average, which is $800 levels, or maybe even come up to test its 200-day moving average. But after this such of a miss, I don't think people think that this is a discount. We can even just take a look at the overall S&P 500 and take a look at the PE ratio of all those stocks in healthcare and what they are trading at. So we can take a look at the forward PE, and then we'll just take a look at the PE. So you can see Eli Lilly trades at a pretty high forward earnings, 33. Compare it to anything else, I mean, it trades double, triple of its peers. You can see Merck, Johnson & Johnson, Amgen, Pfizer, Abivai, Gilead Sciences, pretty large PE. And if you take a look at it, even tech stocks, it trades like a tech stock. I mean, of course, they had a pretty good time during COVID. You can see their revenue was growing double digits in 2021. 2022, sort of a flat, and 2023, again, 19% or so growth. But if they report one more negative, of course, they have already guided down, but you can see this is their revenue from 2019, 22 billion, 24, 28, 28, 34. And we know what's going on with the Pfizer, right? After COVID is gone, revenues are slashed. Stock is basically trading at its multi-year lows, and it has never seen these lows in a decade, probably. Pfizer very recently hit 24, which hasn't seen that level since 2012. So I'm not sounding that I'm bearish or bullish. I never make a one-sided video at all. In all of my videos, I try to cover both upside potential and downside potential. So for this stock to get going, I mean, again, it is very fundamentally driven stock, right? But right here, right now, if it doesn't get back above its 200-day moving average, at the moment 838, I'm not interested to go long this name. Even though I was interested to go way higher up here, if fundamentally, I mean, if they would have just met the market expectations, market would have said okay, and maybe it would have hovered around and pushed higher. But when market again gives you that valuation and you don't justify it once or twice, that's it. It will take it back. It will price quickly the whatever it has to price, and it will punish as quick as it can. And that already has happened actually. But right here, right now, it could be just a relief consolidation zone area to the downside. Well, if it does crack these recent lows of $712 levels, I think it can go all the way to 650, 620. This was the resistance in the beginning of the year, but do I think it's going to happen soon? I don't know, but you can watch Humana as an example. When you start missing earnings once or twice and you trade below 200-day moving average, you can see what happened, right? So, and it will give you, market will give you a little bit of a time and just to see like 2 quarters, 3 quarters. But if you don't justify at least what market is expecting, you don't have to beat it. It will punish you quickly, especially when you are trading at a very, very high premium. You can see where Humana is trading. Of course, in terms of market capitalization, it's only it's 20 times smaller, but it doesn't matter. Momentum can take it anywhere, and this is the level I would be watching if this stock cracks $712 levels. So I don't want to make this video too long, but if you're new, consider subscribing. Thanks for watching. See you in the next stock update video. Peace.